and welcome to the crypto jungle. My name is Baloo, and here on the channel I try to keep crypto simple using the Wyckoff method. We've been studying this method pretty much since the existence of this channel, and I want to pass that information on to you because it seems to be pretty freaking popular these days. So we're going to dive into some of the finer nuances. You know, a lot of people, they overlay the schematics over a chart pattern and they pretty much call it done. But there are other aspects to the Wyckoff method that can help you stay ahead of the curve and inform your decisions. There are three laws of Wyckoff. There's the law of supply and demand. You typically interpret supply and demand between the volume candles and the price action, as well as effort versus result. Again, we're analyzing the price and volume together. A lot of people miss the volume aspect of the Wyckoff method. And then we're going to focus a little bit more on cause and effect. Cause being the accumulation or the distribution itself, and then its subsequent effect in terms of its mark up or mark down. We've done this in previous streams, but we're going to dive in again. But first, let's take a look at the king of all cryptocurrency, and that is Bitcoin. Starting out with Bitcoin on the daily. So it's kind of boring price action right now, you know, but the longer we stay in this area, the more we can kind of assume that we're finding support. You know, the volatility, that downside dumping momentum seems to be slowing, which is a good first step towards building support. This area that I have marked here is between $41,000 and $36,000. The way that I got that target was just by doing a very simple point and figure count on the distribution itself. So I have done this in previous streams. I'll do it once again, just real quick to show you the basics of this method on how you can determine the effect of a cause. So the cause being the distribution itself. So basically from the top of where the distribution enters to where it exits, those large bars, we're going to count how many columns that is. That's a very good question, and I will get to that. Okay, so if we're measuring that distance from bar to bar, we have 15 bars. So 15 bars times the box size, we're using a 500 box size, times the box reversal, which means how many times a 3-box reversal means it takes a $1,500 move to actually change the direction of the columns. You know, X's go up, O's go down. Yeah, so you take 15 bars times 500 times 3 gives you 22,500. So the value associated with this distribution is $22,500. And then you take a measurement from the all-time high and minus $22,400, or sorry, $22,500, and from the LPSY, $22,500. And that gives you a range of $41,000 to $36,000. And that's pretty much where we're hanging out in. We've been in this for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. 10 days range bound in this area. So that's a good sign. That's a good sign. So let's kind of dive a little bit further into this area right here. I'll actually just delete the box because it'll just get messy otherwise. But let's zoom into this area because this is what we really care about is this area right here. So let's zoom in there. Let's go down to a lower time frame, all the way down to the hourly. Hourly is just so that we can kind of control our emotions a little bit. You know, I don't really trade much on the hourly. You know what? Let's just go over the 4-hour. I think 4 hours probably becoming more and more applicable right now. So we got a question here. Why didn't I place the seller's climax where the preliminary support is, i.e. where you got that big wick indicating big money entering in? The reason I did that is because I believe that this is the preliminary support. The market had a consensus, or the market believed that this was the area of support, hence why we got such a large demand tail on this candle. So typically what you see, not always, but often, is you'll get a wick with a huge amount of buying, and then it will just the price will just slowly revisit the general area of where it wicked to. So to me, this is the preliminary support. I don't think that this is the seller's climax. I think this is the seller's climax. And that is just a more conservative approach. We want to be a little bit more conservative when we're looking in terms of a recovery. When we're in a recovery in a downtrend, we have a bearish bias. We need to hold on to that bearish bias. So I don't want to front run an idea thinking that we're coming in for a secondary test in phase B when we're not. And I also want a more accurate assumption of what the potential trading range is as well. So I'm taking a more bearish and conservative approach, saying that this is our preliminary support, and then this is our seller's climax. So with that in mind, Hex USD, ay, fuck that. It's a scam, dude. Yeah, I'm not going to take a look at Hex at all. And if you're in Hex, be aware that is a malicious smart contract. So we'll throw a few labels here. I'll put the preliminary support right here. And this is just my thesis. Again, you know, I'm trying to be a little bit more conservative. This is where kind of the downtrend ended. You know, we were still in a trending environment here, and this area got broken out by this high. So this is kind of the change of character, I'm assuming. So preliminary support, let's get a few labels. We'll change that to a seller's climax and an automatic rally. We don't have a lot to go off right now. Okay, so seller's climax. And the automatic rally. So this is where we are right now, you know, and these distributions are kind of fractal in nature, so you can kind of zoom into the smaller time frames and see a distribution here that's bringing us back down. I want to see us come down and close around $33,000. I think that's would be incredibly healthy. Mind you, if we just carry on from here, that's even better, because the secondary test, what you want in a bullish case scenario is the secondary test makes a higher low. And if the secondary test makes a higher low, that's the most bullish scenario. If it confirms at the level of the seller's climax, that's a pretty good outcome as well. And there are certain rare circumstances where you can make a lower low and still consider it accumulation, but given the current environment, not something that I would be leaning too heavy on if we did in fact get a lower low. I think if we got a lower low here, we would be continuing the downtrend. Okay, so that's pretty much it. You know, this is phase A. We're trying to determine the width of the range. We're trying to establish the trading range. And it's funny that we're trying to establish the trading range between 33,000 to around just shy of 41,000. So still within that range relative to the point and figure count that we were able to do with the on the point and figure chart. So still phase A. You know, if we come back down to this area right here, you know, that would be great. Bounce off of that level, and that would establish us into phase A. So we're still printing phase A. We got to get that phase A printed and we can move on. But keep in mind that the 4-hour time frame isn't a large time frame either. So there will be a lot of monitoring going forward. If you are a swing trader, you know, a shorter term swing trader or a day trader, shout out to Matthew, the creator of the Alphanumerics indicator. He's been getting into day trading, and why not? The volatility is here. But for me, I'm a macro investor. I'm a macro swing trader, and I recommend that anybody that's new focus a little bit more on the longer swings, because, you know, when you're a day trader, you have large balances, and most people that show up into cryptocurrency for the first time, or it's kind of their first introduction to the investment world, they're not swinging around a large balance. So you kind of need to build up that balance, and the easiest way to do that is to just invest. So that's kind of my focus. But shout out to you, Matthew, for doing very well in this volatility, and it's looking good. So let me go over to another chart here, and this is just a reminder, kind of, you know, you got to zoom out. Bitcoin is a very volatile asset with exponential growth. So when you're on the large time frames trying to figure out, you know, make sense of what's going on, it's you can look at it with the logarithmic chart. So if we take a look at the log chart, you know, establishing a range between the top of the LPSY of the original COVID shakeout down to the wick, and draw a few regression bands in here. I mean, we're sitting on support. We're sitting on a key level of support. So a lot of people are calling for lower levels. And when everybody's calling for lower levels, it usually never comes. You know, retail is always wrong. They're always wrong. So don't listen to retail. You know, I'm sorry that I clickbaited you saying 22.8 or whatever the thumbnail said. That's just to get you in here so that I can talk reason to you, because everybody's scared. You know, everybody is so scared right now. The next level of support, if we were to break down from this level, would be around the $20,000 level. The problem is we would be breaking a very significant logarithmic trend line where I would not be a participant at that point. If we did break down to those levels, I would be looking for as graceful as an exit as I possibly could to completely limit exposure to the cryptocurrency market, because this is a very important trend line. If we break this, it's done. You got to be very careful in this area. However, I think that this is the bottom. I think that this is the support. We have a lot of confluence in this area that is hinting to a continuation. Do we need to come back down and revisit the bottom of the logarithmic curve? Probably. We might hang out there for a month. We don't know, but I don't think we have enough fuel in the tank to get down to some of those lower levels. And what do I mean by fuel in the tank? We are in a very illiquid market that has huge amounts of leverage. We've got a ton amount of leverage in here. So what you can do to kind of determine fuel in the tank for a move is open interest. You know, if open interest is really low, we can't have liquidation events. The only way that we would end up down at $20,000 is through a liquidation event. Nobody's long, nobody's short, there's no fuel in the tank. All right, let's catch up with the chat, because I'm sure I triggered someone calling Hex a scam. Wyckoff master. I am not a Wyckoff master, but I do think that I have a better handle on the method than you know, certain YouTuber that's gone from 0 to 150,000 subs overnight. Hex and Safe Moon, best hold for the next 5 to 10 years. Ay, Paul, you need to hit the books, brother. You really need to hit the books. Absolutely not. Couldn't agree with you. Couldn't disagree with you more. Speculative question, are we going for an upthrust right now for a secondary test? I don't think it's an upthrust. I think we're just trying to establish that new trading range. We're phase A. There's no upthrust in a phase A. There's an automatic rally, but there's no upthrust in a phase A. It's a declarative statement. Want to go back to 3rd grade? Bitcoin is a scam. Bitcoin is a scam. Well, Bitcoin is the biggest scam in history that's going to completely replace the financial system. Don't spread misinformation. Thanks, Successful. Are you looking for closes for the lower lows or wicks? Candle body closes right now are more definitive. I want to use the candle body closes at this point. I think candle body closes on the daily are going to be your go-to. So if we can get those daily closes, that's what we're looking for. What do I think about Cake token? I think the entire Binance Smart Chain ecosystem got very overheated, and I think it's going to take some time to repair, you know, like a lot of the market currently. The first mover, if we kind of go back in time and look at how these shakeout events play out, the first mover is going to be Bitcoin. Bitcoin's going to just tell the rest of the market, okay, it's safe to trade again. So until we get a move in Bitcoin, don't even worry about your altcoins right now. If you're looking for recovery, if you're looking for graceful exits, that's a different topic of discussion. But if you're wondering if I could do some analysis and tell you that your altcoin is going to pump, I can tell you your altcoin is not going to pump in the current environment right now. If Bitcoin is a scam, then why are you in crypto? Okay. I would look at Hex. It has a lot of misinformation about it. I will not look at Hex. I think that Mr. Hart is a fucking con artist. I've seen all of this shit before. It's a malicious protocol that penalizes people for exiting that contract, and it is going to completely implode. I'm not gonna fucking look at it. Hex is a scam. I could be wrong, and I'll be happy to be wrong, but I'm not touching it. Please go and talk to a coder about Hex. I don't care about the total value blocked. You know, there's a sucker born every minute. Okay, a trade question. I'm usually macro trader, but wanted to trade a day a bit. Shorted at 40 Do I wait for a spring? No. I mean, a day trader needs to be really aggressive. Okay. Day trading should be a small amount of your portfolio. You should have your investment bucket, you should have your swing trade bucket, and then you should have your day trading bucket. And it should account for the smallest amount of your portfolio. And your price objectives and time objectives are very narrow and easily achievable. For you to have a target that is below the trading range would be an irresponsible day trade target, in my opinion. I think you're being a little bit too greedy, trying to front run a possibility that may not be there. You'd be far better off just exiting a short on the level of support. You'd have a higher success rate with that. The day trades, they're often bracketed trades. You have your entry, you have your stop, you have your take profits, and you can bring it down. What do I think about Tether? I think Tether is perfectly acceptable to use. I don't, a lot of people are quite scared about Tether. If you're scared of holding Tether, most of the trading pairs on Binance are Tether settled. So you're kind of forced to hold some Tether. But if you're scared about some of these stable coins, I would choose USDC or I would choose DAI. DAI is a little bit dicier, but USDC is probably the stablest of the stable coins right now. If Doge met XRP and had a baby. Okay. USDT is a stable coin. Yeah. It is. Yeah. Considering exiting your trade at the bottom of the range. Yes. Good feedback. Thank you, Old Fish Tank. Never been audited. People just sheep into it. I'm assuming you're talking about Hex. Can you look at some Bitcoin pairs? Yeah, we can take a look at that. We can take a look at some Bitcoin pairs. Comp BTC. My preferred stablecoin is USDC. I think that there's just, yeah, I'm much more happy to hold USDC. It's it's just less drama. It's less drama. Can you see Link? It seems more bullish than other alts. Really, guys, like, you want my opinion on alts right now? You have to follow the cyclical nature of this market. And there's nothing that says that your alt is going to pump before Bitcoin. We're trending up in dominance. So, right now, this can keep going. It can keep going till we're back at 50% Bitcoin dominance if history is to kind of repeat itself. So, you're really fighting against the trend. Don't fight the trend. Go with the trend. First of all, the market is in a downtrend. Altcoins bleed harder than Bitcoin. Second of all, Bitcoin dominance, meaning the money flow or the comparative strength of Bitcoin when compared to alts, is growing in the favor of Bitcoin. Yes, altcoins make more money when they are making money, but when the altcoins are not making money, they don't. So I can look at some of these altcoins, but you're far better off looking at the Bitcoin comparative on those ones. But I will take a look at Link BTC for us. Possibility of an all-time high in ETH before July? Possible. Just planning swap from ETH to BTC. So far, 80% ETH, 20% BTC. That's not how I would structure my portfolio. I would probably have it the other way around. What do I think about gold stablecoin? I don't know. I'm not interested in gold. If I'm to pick between Bitcoin and gold, I'm gonna pick Bitcoin. If I'm gonna pick between Bitcoin and a stablecoin, I'm gonna pick a stablecoin. So for me, it's not something that I'm really interested in. From a mining perspective, Bitcoin is overpriced. What is your opinion? From a mining perspective, Bitcoin is overpriced? Oh, meaning that the base price, yeah, so mining Bitcoin is still profitable, I guess is what you're saying. So that's a good thing. People are going to mine. $15K to $35K is way more logical. For what? The Bitcoin low? 15K is far too bearish in my opinion. The entire market is bearish. The whole herd is bearish. If the whole herd is bearish, how are we going to capitulate down to those levels? My thoughts on the internet computer is it's completely overpriced. You know, it's been done so many times. People keep trying this whole node, this node-based internet, you know, substratum or substratum. I don't even know. They come and they go. So a lot of excitement. It was definitely well marketed, and there's a lot of market participants, but it went to the top 10 in a week. It's overvalued, in my opinion. It needs adoption. You can't be in the top 10 without adoption. Is there a possibility that Bitcoin just blasts out of this range, and how would that happen? I mean, you know, at the end of the day, these candles, they're just people buying and selling, and we do our best to interpret the charts. So if there's an accumulation period where, you know, institutions are accumulating, then we'll see it. If there is a recovery, a V-shaped recovery that leaves the trading range and consistently goes up, we'll see it, and it will, you know, we'll have a different scenario on our hands. You know, the TA is not a crystal ball. It's a way for you to interpret the information as it comes to you. If you guys want to learn more about technical analysis and specifically the Wyckoff method, it's what we teach in the virtual classroom in the Discord. If you are not already up to speed, or if you're new to crypto, you're kind of, you know, I don't want to freak you out. I really try to keep a level head here, but you're running out of time to learn. If you're wanting to actually trade these things, you definitely need a good base set of skills. And if you don't want to do that, then I think you should just do the hodl strategy. You know, DCA in, have a position and hodl it. And traditionally speaking, we're in the area of a good buy zone, not financial advice, but yeah. Hash ribbons. Yeah, the hash ribbons are about to flash, I believe. Hash ribbons about to flash on the BTC. Let's take a look at the hash ribbons. On the daily. Yeah, so we're just waiting to print that buy on the hash ribbons. You know, traditionally speaking, every time we get this blue circle, it's been a pretty good indicator of an uptrend. You know, here we got one that brought us to the rally peak before the COVID shakeout. This buy right here brought us into the DeFi summer. We got another one right before the DeFi summer. We got another one right before our huge breakout and rally. And we got a minor capitulation event, and they're back online, they're back mining, and we're just waiting for the 20-day moving average to cross, or the 10 to cross the 20. And we'll get that buy signal on the hash ribbons. Discord link is dead, but if you go to the top of the pinned comments, that is a live one. So I can't, I gotta take that off. I keep forgetting to get it out of the show notes. I gotta remove that from the show notes. Scammers kept coming in. You know, I kept getting spammers and scammers coming in, so I gotta constantly refresh the links. So the new link is the pinned comment, or actually, no, it's not pinned. Let me get you a fresh Discord link. Got to keep those scammers out, man. Discord is fraught with scammers, just like Telegram. And it's just, you know, you have to be on the defensive. I have a community that I need to protect, and I don't need, especially as we get later on into the cycle and more people start to flood in, and they may not be so savvy on what a scam looks like. You got to be very careful.